All right, guys. So welcome back to Coffee Cafe. We are in the midst of doing week 2. Last thing that we did was that we hired Irene. She's a full-time employee. We got her information and we placed it into our payroll section. We also hired Mr. Albert Allen as a sales representative, and he's going to be commission based and a 1099 contractor or worker. So here we're going to see an example of one person doing, or we're going to see the example of doing payroll for just Irene. And we're also going to look at an example of having a 1099 worker and just writing them off as an expense or paying them off as an expense. So they get to claim 100% of whatever we offered them. So in this case, Albert is going to receive 100% of the 10% total sales that he earns. Okay, so now we completed June 11th, so now we're going to go ahead and start the day off with June 12th. Okay, so let me make this a little bigger. So what has happened here?
All right, June 12th. Pay $85 for 1/4 page newspaper ad to run from 15th of June to the 20th of June in the Las Vegas RJ business credit card.
Wow, so we're gonna finally start by making a charge to our Visa credit card. So yay! So how are we going to record this transaction?
Okay, so well, if the date is
June 12th.
Okay, so that is the advertisement or advertising expense.
Correct, because we're getting an ad, right? We're having our we're marketing our grand opening in the registered journal, whatever you want to call RJ for. So we're putting it in the newspaper, and it's going to cost us $85 to run the ad for a couple of days. So we have advertising expense. Okay, and what account number is that?
That is 60,000.
60, 1, 2, 3. Good. All right. Next thing that we did was we charged our credit card. So is our credit card something we own or something that we're going to have to pay back later?
We have to pay.
Yes, so it's going to be a credit. Now, of course, I have it on the journal, but just want to make sure that you understand why. So here, yes, it's considered a liability because this is money that we do not own. This is the business bank. They loan us a credit card. So anytime we charge our credit card, it just makes us have to owe more money than what is already, right? And the one thing that we need to learn about is this credit card transaction is going to charge us interest. All right, and my credit card, since I'm using it for the first time, what is my account number?
22,000, yes.
Yep.
Yes, 22,000. Again, I charged my credit card with $85. Okay. Okay. And then let's go ahead and make a note here. So, who is the vendor I am going to be working with?
That is Las Vegas RJ Review Journal, secret one.
Okay, so we could just do LV for short for Las Vegas. LVRJ. Where's my J? Okay, R. Okay. And then you can write details like 1/4 page newspaper ad. Okay. And that's pretty much it. Nothing else. Right? Because we didn't pay with a we didn't pay with a check. And when you pay with a credit card, it's as if you paid with your own money. So there's no real details that you need to really confirm here.
Did we
So
include the dates that we're running it?
you can too if you want to be more
Is it something
descriptive.
you're doing regularly?
I don't think so. This is just for a grand opening.
Okay.
So it's up to you if you want to. More details, allows you to have more, you know, better understanding of the transaction. So it's up to you if you want to add it or not. But I think just the vendor, what it is, and that's pretty much it. Okay.
Okay.
So what happens next?
Okay, so next we go to the ledger.
Yes, so we have advertising expense. And so we're going to go to operating expenses. And that's going to be our first thing that we have here. All right. So June 12th. So this is where you could go ahead and add that information. So you could go ahead and write 1/4 page, newspaper ad. And this is where you could say you want it to run on June, okay, so 6/15 to 6/20. And then here, I'm also going to indicate that I paid with the Visa credit card. Visa CC. All right. So, post reference is going to be my General Journal
Number
4. And my advertising expense was supposed to be for $85 because it's my first time in my account. It's going to reflect as $85. Okay. Now we're going to go to our liabilities because now we've created a second account for our business credit card. So here you go, 22,000 should be the very second table underneath your first ledger. So here I'm going to go ahead and indicate that on June 12th, I'm going to go ahead and write advertising 1/4 page news ad. Okay. And the General Journal number 4. And because it's a liability, I'm going to credit my account for 85, making my balance, because my first transaction, to be $85. Okay. Now that I've placed it into my ledger, what's going to come next?
Now we have the subsidiary because no, we don't have a vendor.
Yes, we do.
I mean, oh, okay.
We had to
But-
pay somebody.
Well, yes, okay, so I see. No, I'm confusing myself with the credit card. So we paid them with the credit card, but yes, so the Las Vegas RJ.
So here I'm going to go to my vendors for the Las Vegas RJ, which should be right under LV Remodeling. Nope, after Landlord. Las Vegas RJ. So again, date is June 12th. Same thing here. You could place all the information saying it's a 1/4 page newspaper ad. Okay. And you can also say it's going to run from June 15 to June 20th, and you paid with a Visa credit card. Okay, so again, now that I have this piece of information in here, of course, I'm not going to have a receipt or invoice number. My post reference is going to be General Journal Number 4, of course, when you're running an ad, you're not going to get a discount. So my invoice amount is going to be for $85. And because a credit card acts as if you paid them that very same day. So in this case, because I've indicated that I paid with my Visa credit card, therefore my amount that I owe to the Las Vegas RJ is going to reflect as 0. Okay? Because again, it's when you use your business credit card, it's as if you just paid for it. Yes. All right. It's not that you owe them on an account, it's already a paid advantage. Now, of course, we talked about that, right? You said, like you said, Robin, we are dealing with a credit card and it's our bank's credit card. So technically we do have an account for them, but this account is actually for us collecting our interest. And when do we normally collect our interest?
After the 30 days.
Yes, after the first months of transaction. So you might not even get your bill until 2 months after, because usually you never know when you're going to start spending. So again, we do have a national bank credit card Visa payable account. But again, we're not going to place anything in here because we don't have a bill. We don't have an outstanding amount yet. And we don't have the interest that occurred already. So in this case, we don't need to fill out anything here because, again, we've only done one transaction. We have to, it's an accumulated, exactly, we're not there yet. So therefore, we do not need to deal with this vendor. Okay. Other things that you could place here if you'd like is obviously the interest. But again, when you get your bill, it should give you all the details and you can fill that in later. Okay, so here we successfully journalized our first advertising and credit card transaction. So what came next?
Let's see. Oops, sorry, I scrolled up. We ordered 2,000 advertising flyers at 5 cents each from city printers. Put 50% down, and we paid the $50 with a credit card. It looks like a Visa credit card.
Good, good. We only have one credit card. So yes. So not only are we bought a newspaper ad, we're also going to be distributing flyers to hand out to the public, right? So then we can get some more, sales going on, right? You release the flyer saying, hey, if you come now, you get a sales discount. So, our grand opening promotion. So here, let's go ahead and journalize this transaction. So how am I going to record this down payment? Because they require a 50% down payment in order to have the job get started.
So it's prepaid.
Yes, it's going to be prepaid accounts, right? Because again, a down payment is us in a perspective, it's like we're buying a voucher, okay? And then when we receive the items, that's when we redeem our voucher. So yes, we need to make our first voucher purchase. So we're going to make a prepaid advancement to our city printers. So prepaid accounts, all right? Do we remember what account number that was?
18,600.
18,600. And how did we pay for this down payment?
With our Visa.
Yes, with our Visa credit card. So Visa payable. Okay. And of course, we could just look at the transaction from above and find out that Visa payable is account number 22,000. Now, of course, let's calculate how much is my 50% down payment.
$50.
It's $50, yes, because I gave the calculation to you already. So again, 2,000 times 5 cents should give you a total of $100. And in this case, we're making a 50% down payment, so I need to make a payment of $50. All right. And again, I'm going to make my note here saying I have City Printers as my vendor. And I'm going to order 2,000 flyers, right? And I'm going to have a 50% down payment. Okay? All right. So now, where do we go next?
Next, we're going to go to the general journal.
We just finished the general journal.
I mean, sorry, the ledger, the general ledger.
Okay, good. So now I have a prepaid because I haven't picked up the flyers yet. I'm ordering the job to be done for when I pick it up. So therefore, I haven't incurred the advertising expense yet because I don't have the flyers yet. So right now I'm just recording my voucher, okay?
Mm-hmm.
So prepaid is an asset. Yes, prepaid should be above deposits. Here it is, prepaid accounts. So I'm going to go ahead and indicate here the date is June 12th, and I'm going to write 50% down. So D W N P P M T for the 2,000 flyers. Okay. General Journal number 4, and we have this for $50. So bringing my account balance to be
Oh my gosh, I don't have the thing in there. Why is my formula not in there?
we could practice the formula again if you'd like.
Okay.
Okay, so again, it's going to be equal.
Uh-huh.
We're gonna take the amount from above, so 6654.17. We're gonna add any debits, which is 50, and we're gonna subtract any credits, which is 0. And then enter.
And then you said we're gonna subtract any debits and add any credits.
Opposite. We're going to add any debits, subtract any credits.
Plus, and then it's telling me I don't have it in there. What's it doing? Okay. Equal. Click on that.
Mm-hmm.
Yeah. And then let's. And then it's telling me it's false.
It's
I don't know what I'm
false?
doing. Yeah, it told me it came up and it said false.
Okay, so do you actually, okay, so, I don't,
Oh, I know. There we go.
okay, so what's the total of that?
Alright. Yep, it came to $6,704.17.
Good, good.
All right.
Okay.
Sorry about that, guys.
No worries. We're all learning together. Okay, so here you go. Good. 6, 7, 0, 4, 17. And then now we got to go to our liabilities and enter in the accounts for our credit card transaction. So on June 12th, I'm going to also put the same exact information. 50% down payment. On 2,000 flyers. Oh, 2,000 flyers. Okay. General journal number 4. All right, and because we are charging an additional $50, so here, this is where the account formula is going to look a little different. Essentially, it's the same thing, but we're going to be adding our credits and subtracting our debits. So we're going to go up 1, so equal up 1. We're going to add our credits, which right here we have 50, and we're going to subtract our debits, which is going to be 3 to the left. Not in the normal balance, but in the actual debit column.
135.
Yes, 135 is correct. Right? And then lastly, we're going to go to our subsidiary ledger because, yes, we do have a City Printers account. So here we are. Computers are us. Here is City Printers. So again, I'm going to go ahead and indicate that on June 12th, that I am purchasing 2,000 flyers, okay, with a 50% down payment. So NPMT. All right. Invoice number. In this case, I don't have a receipt number. General journal number 4. Of course, when I have advertising, I don't have any terms or anything like that. And so again, we're going to practice this way, right? We have, if we're going to make a down payment, we're going to act as if this is a invoice amount. And when we receive the bill and receive the items, that's when we go ahead and credit it as a advanced payment. So here I have invoice amount for 85, and I made a payment of 85 because I used my credit card. Oh, that's something that you could add to.
Wait,
No, it's 50.
we're on the 50, not the 85.
That was the.
Oh,
the
yeah.
new journal.
Thank you. So let me write Visa. So yes, okay, sorry about that. Thank you. So 50, and I made a payment of 50. So therefore, right now, I owe City Printers nothing. Okay? So let me highlight that, and let me format it. So I'm going to double check my work here. So let me see in my ledger. Did I write 50? Yes. Okay, in my journal, did I write 50? Yes. Okay, good. So everywhere else is 50. Okay, so there you go. That is that transaction. It's been paid off the $85. Right? So then what has happened next?
Okay, we still Wednesday, the 12th.
Oh.
Received inventory. Or June the 12th, right?
Mm-hmm.
Received inventory, perpetual,
Okay.
regular coffee, moving average,
Mm-hmm.
and then perpetual, supreme coffee, first in, first out.
Okay.
Okay.
So what are we going, how, okay, so let's look at our details. So what do we have here? So we have this from Atlas Coffee.
Atlas Coffee. Mhm. Let's see here. It has the quantity, two separate items, the regular coffee and the supreme coffee. There's the terms. Everything is here. The 1% at 15, net 30.
Mhm.
And the total due of 362.50.
Okay. So again, because the assumption is we're not going to pay now, where are we gonna, we're gonna owe it, right?
Correct.
So how do we journalize perpetual inventory?
Okay. We don't.
Why do we
Wait,
not?
wait. We do it right away. It's constant.
Okay.
We have to, well, I mean, we have to do that, right, as well as inventory.
Yes, we're gonna be utilizing
We
our
have
inventory
to-
worksheet.
Yeah.
Mm-hmm.
Um, I don't know.
Okay, so when we recognize perpetual inventory,
Mhm.
how do we
Oh, wait, what?
journalize perpetual inventory? Do you guys remember this? This is chapter 7.
Everything goes straight into inventory.
Everything goes straight to inventory. So do we have an inventory account named after these specific coffees?
Let's look.
Check in your chart of accounts.
Yes, I see regular and supreme.
Good.
Yes.
So let's look at those account numbers. So regular and supreme coffee is 1220 and we have 1240.
40.
Okay, so good. So if we're going to be recognizing inventory on June 12th, right? We recognize that we're going to be journalizing straight into inventory. So we have a regular coffee and we have supreme coffee. All right. So again, this was 1220 and 1240. How much of the regular coffee did we buy?
Let's see here. 125 pounds.
Okay, that's 125 pounds, but what is the amount it costs for the 125 pounds?
Oh, the total cost was $168.75.
Good. And then how much supreme coffee did we buy?
125 pounds also for $193.75.
Okay, bringing us a grand total of
362.50.
$362.50, and we are going to owe it on an account, right? We're going to pay them later.
Accounts payable.
Accounts payable. All right. So therefore, I'm going to go ahead and make my note here that I received this from Atlas Coffee, importers. Okay. All right, and my terms are
1%, 15 days for net 30.
all right. What's my invoice number? That's what I was missing. Invoice number
315.
315. 1%. 15 net 30. All right. So good. So now, before we move on to our ledger, let's go ahead and check mark this off in our purchase orders slips, purchase order slips. Okay, so purchase orders. I received my coffee, right? And this was invoice 315. Okay, so everything I made purchase orders for has been received so far. All right. Then I'm going to go back to my journal. All right, and now we can go post this to the ledger. So let me see. First thing I have is my regular coffee, which is considered an asset under inventory. So here it is, my regular coffee. Okay, and I'm going to be specific in my items. So here I'm going to say I purchased 125 lbs pounds. Okay, right? Okay. A post reference is going to be my general journal number 4. And because I am increasing my inventory, how much am I going to increase it for?
That is for the regular coffee, 168.75.
All right, and because that's my beginning balance, therefore that's how much my normal balance is going to reflect. I'm going to highlight all of this and make it into decimal. Okay? So good. Now the next thing I have is my Supreme Coffee. And my Supreme Coffee, again on December 12th, I purchased 125 lbs. Okay, general journal number 4, and I've debited my account for
$193.75.
193.75, bringing of course my account balance to reflect the same thing. I'm going to also highlight this, oops, and I'm going to place it in decimal form. All right, good. So I have here 193.75. All right. Last account that I have is going to be my accounts payable. So again, go to my accounts payable, and of course the first account I have here. So on June 12th, we have invoice number 315, general journal number 4, and I'm going to have it for the total amount of $362.50. Okay, which is going to bring my account balance to be
$11,488.35.
yes, 11,488.35. Okay, good. Okay, good. So now that I've finished this, now I can go ahead and go into my actual subsidiary ledger and update my first entry into my Atlas coffee. So here's my Atlas coffee, 612. Okay, here I'm going to write that I purchased 250 pounds of coffee. Okay, invoice number 315, post reference general journal number 4, terms, yes, I was given terms. If I pay within the 15 days, I will get the 1% discount. If not, I pay in full in 30. Okay, so what is going to be my discount date, the last date I can receive the discount for?
For the discount, sorry.
On the 27th?
Yep.
Yep, the 27. So 27 of June. When is the whole thing due?
Would be July the 12th.
July 12th, yes. Okay. We didn't make any prepaid amounts, so what was our total invoice for?
$362.50.
Okay, and because we made no payments to it, therefore you are gonna owe Atlas Coffee $362.50 for this first bill. Okay, and I'm gonna format it. You go. Okay, now next thing is now we're gonna go into our inventory worksheet. All right, so here I've already indicated for you that the regular coffee is going to be moving average. Okay, I filled out the top for you already. So all you have to do is just fill out the table itself. So on June 12th, we received a quantity of 125 pounds. And each pound cost how much?
Let's see here. $1.35.
It costs you $1.35, okay? So you could get your total purchases here of $168.75, okay? Freight expense, we haven't incurred it yet, so go ahead and let's leave it from here and then continue on to the other one, okay? So Supreme Coffee, okay, go ahead, okay?
I'm sorry, I was putting it in the wrong category, so I have to redo that really quick.
Okay,
Sorry.
no worries.
Sorry. Go ahead.
Okay, so again, now that we haven't incurred freight expense, I'll give you a hint. That's the next part we're going to be dealing with. So let's go ahead and leave the page and move on to the Supreme Coffee and enter the information in there. Okay, so again, the date that you receive the inventory is going to be June 12th, right? We received a quantity of 125 pounds at, how much is it per pound?
155.
155. All right. Of course, with our purchase expense, it's going to be quantity times the units price, which gives you a total of
The 193.75.
$193.75. Okay. So good. Now that we've calculated our first round of inventory, let's go ahead and see what happened next. Okay. So here is that journal entry we just completed already. So what has happened next?
We get an invoice for the shipment of the coffee from Freightline.
Yes.
$62.50.
Because this is in another state, they utilize a third-party vendor to ship the items out to us. So in this case, what's so significant about this particular shipping?
COD.
We have to pay for it the minute we receive it. So if it's COD, how much is the coffee? How much was the tax? I'm sorry. How much was the shipment charged for?
$62.50.
$62.50. And because we have equal amounts of coffee, what's your assumption?
You're gonna divide it by 2.
Yes.
Split it in half.
Exactly. 50% is going to go to this regular and 50% is going to go to the Supreme, right? Freight is measured by weight, how heavy the item is. So in this case, we have equal amount of pounds that we ordered, so therefore this shipment is split in two. So, how are we going to journalize this in particular?
It's just gonna roll into our inventory.
Good. So, how am I going to journalize this?
Let me see. Um, I'm just looking to see. You're just gonna do it as a separate journal entry and make a note and then add it to your inventory?
Correct. So, what accounts am I going to be using? Because everything goes into inventory. That's what you mentioned earlier. So,
Right.
what?
So we'll do half into the regular coffee, half into the supreme coffee.
Good. So, we're going to
And
be.
then instead of accounts payable, we will do checking because we're paying it up front.
Good. All right. Excellent. So here we recognize this as perpetual inventory, right? That means all costs associated with it to get the asset to your store is going to include everything, including shipping, freight, and whatever, and it's going to be included into inventory. Everything's going to go into inventory. So here we're going to recognize that 50% of the freight's going to go to your regular coffee. So what is 50% of 62.50?
60 or 31.25.
Yes, right? 31.25 is going to go to your regular coffee, and the other one is, and the other 32.25 is going to go to your supreme coffee to give you a grand total of 62.50, which again meant you mentioned that because you're paying COD, you will be writing a check. Okay. So let's go ahead. Okay. And my checking account. Oh, I didn't even fill in accounts payable. So my accounts payable account is 20,000 and my checking is 10,100. Right? So now we look at this information. So I'm going to go to my check register first because do I know what check number I'm going to use?
No.
No. So let's go ahead and go to my check register. So the check that I'm going to be using is going to be 1512. So 612 is going to use check number 1512. And it's going to be for the amount of $62.50. And who are you writing this check out to?
Freight line.
Good. Freight line. Okay. Now that I have this information in here, I wrote my check out. I'm going to go ahead and complete my journal by filling in the person I wrote the check out to, so freight line. Is there an invoice number on this?
There is, and it is number 482.
Good. And lastly, check number
1512.
1512. Right? Good. $15.12. Okay. So now I'm going to go to where?
So now we are going to go to our general ledger.
Yes, we're going to update our ledger first. Always, that's an always rule of thumb. Okay, so here we're going to go back to our inventory.
Correct.
All
Yep.
right, here we
Asset.
are, asset, inventory. And this time I'm going to go ahead and insert my freight cost. So that's what I'm going to put, freight cost. Okay? Same thing, general journal number 4. And this time I'm increasing my account by $31.25. So again, we're going to apply that same exact formula. Okay, equals up 1,
Uh-huh.
add any debits, subtract any credits.
Which gives us exactly $200.
Gives us exactly $200. Now, let's make note of this because this is going to be the crucial part when we start going back and forth to our inventory worksheet. All right, so here we should have a total of $200 worth in our inventory for regular coffee. Okay, so let's go ahead and go down to Supreme Coffee. Same thing. On June 12th, I'm going to introduce freight cost for General Journal number 4, and I'm also going to be adding my other $31.25.
One, five. $225.
225. So that means this is the total amount that I should have in my inventory for Supreme Coffee. So now that we have incurred our freight cost, okay, before we update our inventory, let's go ahead and just get through with the subsidiary ledger. Okay?
Wait, we gotta do our checking.
Yes, thank you. Yes. I completely see. Good. So now we got to go to our checking.
Mm-hmm.
All right.
Check number 1512.
15.
Journal 4. And
General Journal 4. I wrote it out for $62.50. So I should have a new ending balance of
5689.92.
good 56.89.92. Right. Now let's go ahead and just finish up our subsidiary ledger, and then we could go ahead and update our inventory. All right. So I want to make sure that we keep the same line going as in entering data. So right now we have journal, ledger, subsidiary ledger, and then our inventory worksheet. Okay. So here I have a new vendor. It's going to be Mr. Freightline. So here we are, Freightline, date. There you go. Notes. So notes, you could say 250 pounds coffee. Okay, and then you could even enter in Atlas if you would like, so you know where it came from. Atlas coffee imports. Okay. General invoice number, I think, what was it, 1452, was it? 14?
482.
482. 482. All right, post reference is General Journal number 4. And terms. Terms is going to be COD. I can't find my O. D. Okay? So another thing I gotta add in here too is I gotta also write my check number in here. So after Atlas Coffee Importers, check number 1512. Right? Okay. So now that we are here, okay. Of course, they didn't give us a discount at all because it was COD. We didn't make any prepaid amounts, so our invoice amount was for $62.50. So therefore, my payment, which I did make a payment for, using my check, I should owe freight line $0. Okay. All right. Let me know if everyone's here.
Yep.
Okay. So now we can finally come back to our coffee. So our inventory worksheet. So here we could go ahead and complete our transaction by entering in our freight expense. My freight expense was charged for $31.25 for regular coffee, and I should get a grand total of,
225.
oh, well, that's for Supreme.
Oh, I'm sorry. I'm on the Supreme one. I went to the other one. Sorry.
That's fine.
Let me go here. So it's 200.
Yes, 200 for my regular coffee. Okay. And because it's my only batch that I have here, what is going to be my cost per item?
$160.
So I'm going to take my 200 divided by 125 to give you 160. All right. And because we're dealing with perpetual inventory, what I'm going to do is I'm going to transfer it across over into inventory on hand. So right now, I currently have 125 items costing me 200. So remember, because we're using moving average, we need to copy our total cost over, because at the end of the day, every time we make a sale or every time we make a purchase, we're going to be constantly updating our average cost per item. So in this case, I'm transferring over only the quantity and the total cost. And my calculation will be taking my average cost. So taking my 200 again and divide it by my 125 to get me a average cost of 160. All right. Okay, so good. So that is my first inventory here.
Hold on a minute. I messed that up again.
No worries.
Oh, give me 1 second. All right. I'm sorry. Will you do the formula with me one more time?
For which one?
For the on hand.
On hand, it's
moving it.
yeah, it's just total, so 200, the total column, divided by the quantity. Okay? And we're not going to use equal round, because remember, the whole point of having inventory on hand is we want to calculate to the nearest thousandth of a penny. But when we get to our cost of goods sold, you cannot charge your customers a tenth of a penny, or you can't cost a tenth of a penny. You have to round it. So we will be utilizing the equal round when we make our first sale of an item. Okay? So for now, right now, my average cost right now is $1.60, right? We solved it here and we also solved it here. Okay? So now we're going to go ahead and move along to Supreme Coffee. All right, we're going to fill the same thing in, $31.25, bringing my total cost to be
Blank. $225. Sorry, I was trying to put in the formula.
no worries.
I know that's what I'm doing.
Yeah.
And then cost per item is going to be this. So our total cost is $225 and our cost per item is $1.80.
Good. Okay, so far we have good solid numbers. So in this one, this is where it's okay to go ahead and copy our quantity, which is we have 125, and we're gonna copy our cost per item, okay? And then for this one, this is where we're going to multiply our quantity by our cost to get our total amount of inventory, right? So this is every time we make a sale, it doesn't really matter because our cost per item will stay constant. It's not going to move because we're using first in, first out method, meaning we need to keep track of our batches, and this is how much I'm costing my items out for is this exact price. So this is where the formula is different. This is where you're going to keep your cost constant. Sorry about that. Oops, sorry about that. If you excuse me a bit. Okay, so sorry about that. So let's go ahead and finish up our inventory. So here, this is where we keep our costs the same because we're utilizing the first in, first out. So therefore, we know for a fact that we need to keep the the cost per item constant, right? And that's where it is right here. Okay. So good, now that we solved for that, we're completed with our inventory worksheet. So now let's go ahead and continue with the rest of our problem. Okay, or the rest of the scenario. So now that the 12th is complete, what happened on the 13th of June?
Okay, we hire Silver State Electrical to upgrade electrical wiring.
Yay, so what is this electrical wiring for?
I don't know.
For the grinder.
Good, for the
Oh,
grinder.
the past. Okay,
Yes.
so, yeah, past thing. So
So good, we're only hiring them. So do we need to record this transaction?
no, because they haven't completed the job or given us any invoice or anything yet.
Good, we only hired them. They haven't completed the job. No bill has been received. So then what has happened next on the same day?
Okay, so receive bill from LV Remodeling for reinforcing the foundation.
Okay, yes. So now we have a bill from LV Remodeling, again, for the purpose of our coffee grinder. So where is our coffee grinder located right now?
Let's see here, where is it? Well, it's sitting and waiting.
Yes, it's
somewhere.
sitting and waiting somewhere.
Yes. And let's see. Am I going to find that somewhere?
Okay, so when we actually received our inventory items, where did we place it?
Oh, sorry.
Do you remember? Where did we place it?
No, I don't, obviously. I think inventory, but we're not using it because we didn't place it in service yet, right?
Okay, so it's not an inventory item because we're not selling our coffee grinder.
Oh, so yeah, it's equipment.
Yes, but right now if you go to our let's go ahead and take a look at our ledger.
Okay.
Do we have anything located in our coffee grinder section? Let me find it. So
No.
here's the
That's
thing.
where I was first, and it's not there.
Okay, good. So it is not there. So Okay, so equipment, we have our coffee brewer, but where did we have this coffee brewer from? Where did we move it from? Okay, I'll give you a hint. What is the
It's in our miscellaneous.
miscellaneous suspense? So if we scroll down to miscellaneous suspense, that is where our coffee grinder lies. Okay? Yes. So because of that, and we have an installation or a foundation, which is part of the coffee grinder, we're gonna go ahead and dump this little bill into miscellaneous suspense because that's where the grinder belongs to. So we're including the cost of the foundation with the grinder. So in that case, let's go ahead and record this transaction by placing the grinder into the miscellaneous suspense. Oops, sorry about that, guys. So again, here is miscellaneous suspense. I believe it's 13 now. We have miscellaneous suspense. Okay. And of course, we're not going to make a payment to this because we received a bill. So our assumption is we're going to owe them the money. So here, we're going to recognize that it's going to be on accounts payable. Okay. So what account number is miscellaneous suspense?
It is 19990.
19990. All right. And my accounts payable is 20,000. Okay. So how much was my bill for this foundation?
Okay, let's see here. The invoice amount is $1,560.
Good. And that's how much I am going to owe. Is $1,560. Okay. All right. So I'm going to go ahead and make my note for my description that this was from LV Remodeling. Invoice number
1760.
1760.
Sorry.
No worries.
Well.
Okay, and then you can add any details saying, okay, well, when is it due? It's due net 4. And other things you can also indicate here is foundation.
Foundation for grinder.
Foundation for grinder. All right. And there, my journal is now complete. Okay. So now that we have this section here, we're going to go to my ledger, and now I'm going to update my miscellaneous suspense. Okay. So again, I'm tacking on my foundation for my grinder. So I'm going to go ahead and indicate here. You can put the invoice number so you can recognize where this came from. Invoice number 1760, and then you can write foundation for grinder. Okay. General journal number 4, we're still on 4. And now I'm going to increase my account by $15.60, right? Bringing my new total cost to be
$3,088.07.
good. So that's how much my coffee grinder is worth right now. Now we still have one more thing left, which is the electrical work. So once we receive the bill for the electrical work, then we can go ahead and place it here and be able to move our asset out of miscellaneous expense. Okay? But still, we gotta wait for that bill. Okay? And now that it's here in miscellaneous expense, I'm gonna go ahead and update my liabilities. Okay? For the coffee, for the coffee grinder, of course, for the foundation. So 613, invoice number 1760, general journal number 4. And I now owe an additional $15.60, bringing my account balance to be
$13,048.35.
okay. Yay! So we match. Okay, good. Now the last thing we gotta do is now go to the subsidiary ledger to update Mr. LV Remodeling. Okay, so vendor again. Okay, I think they're the first one. LV Remodeling. 613. So now my notes here is, instead of interior design, this was a bill for the foundation for coffee grinder. Okay. Invoice number 1760. General journal number 4. Net 4 was when the bill is due. And so when is the bill actually due? What date?
17th.
Yes, 17th of June for the amount of $15.60. And of course, we didn't make any payment to it. So if I have my formula correct, if I pull this down, I now owe an additional $15.60, bringing my grand total of amount I owe for LV Remodeling to be $3,450. Okay? And I do have the flexibility to choose whether I pay one bill or I could pay all the bills at once with one check. So that's one of the things that we will get to see as well as we move further down into our scenarios. Okay? So now that is done and that is cleared out, we can now see what has happened next in our journal or scenario. Okay, so here we complete our miscellaneous expense and we have that. So what has happened next?
Contact with hire temps, a temporary help agency for one person to work 8 hours per day from the 17th through the 19th of June at $10.50 per hour. Payment due on the 21st of June.
Okay, so this is a lot of piece of information. So what you can do here is you could place this as a reminder in your ledger that when you make a payment, that this is exactly what the terms are. You're hiring them from the 17th through the 19th, so that's 3 days. You're only hiring one person, and you're gonna pay them for 8 hours a day for $10.50 per hour. So what I'm going to do is I'm going to go ahead and place that information in my ledger. Okay? Not my ledger, my subsidiary ledger. Okay? Because I do have Hire Temps as one of my vendors. So I'm not going to place the date yet because I haven't made a payment yet. But it's also, but I want to make sure that I get this right. So one person, 3 days, 8 hours, at 10.50 per hour. Right? And then obviously we're going to have room to write our check in there. So there you go. This is just key information that I need to know when I'm dealing with this vendor is this is what I requested. One person to work 3 days, 8 hours for $10.50 an hour.
But we're not putting today's date in there.
No,
that date,
absolutely not,
So
because
we'll leave that blank for now because it hasn't really happened yet.
yes, it does because they haven't started working.
Right.
They start working on the 17th of June.
Gotcha.
And because we said, hey, we'll pay them on the 21st. So on the 21st is where you're going to incur this. Okay? This is just a little FYI so I don't have to dig through my scenario to find where this piece of information is. Okay? So good. Now the next thing, so now that we completed the 13th, we have now the 14th of June. So we have a couple more transactions. So what has happened on the next day, on the 14th of June?
Let's see here. So pick up advertising flyers from city printers. Total bill is for $100 minus the down payment of $50.
Mm-hmm.
So pay $50 balance with credit card.
Perfect. Okay, so here you go. We have we've on the 14th, we picked up our our 2,000 flyers. We're gonna pay for the full amount, the remaining 50% with the credit card, and we also gonna redeem our voucher. So, how are you gonna journalize this? What was your total advertising expense here?
Let's see here. It was the $100.
It was the $100, right? And we're redeeming our $50 voucher. So therefore, all we have to do is make a payment of $50 extra. So good. So advertising expense is going to cost you a total of $100. So how we understand this is because in the first place, we never recorded that we had $50 worth of advertising because what did we not receive?
We hadn't received the flyers.
We haven't even got the flyers in the first place. So therefore, you did not really incur any expenses there, right? You didn't have what you bought in the first place for the business. So in this case, now that I came to pick it up, now this is where I can recognize the full amount of my advertising expense. So here you go, advertising expense, okay, for the amount of $100. Okay. And my account number is for advertising expense.
Is the 60,000.
Okay. And of course, because we are now redeeming our voucher, so we need to credit our account. We need to credit our account for prepaid accounts to redeem our voucher. And how are we paying with this?
The Visa.
The Visa credit card, so Visa payable. Okay, so here my prepaid account number is
1860.
18,600, and then my Visa payable is 22,000. Good. So again, I'm recording or redeeming my $50 voucher, and all that's left remaining is my $50 payment on my credit card. All right. So I'm going to go ahead and make a note here that I picked up from the city printers. City printers. Okay. Picked up 2,000 flyers. Okay. Do I have an invoice number for this? I don't believe I have
I
one.
don't think so. There
Okay.
would be one, but
That's okay. All right. Okay, so now I need to go ahead and update my ledger account. So the first thing I'm going to do is go to my operating expenses because now I have the full 2,000 flyers in my hands. So here on the 14th of June, I picked up or received, or actually in this case, I could go ahead and write 2,000 flyers. All right, general journal number 4. And I've increased my account by $100. Therefore, making my grand total balance to be,
hold on one second. I'm behind you in typing for some reason. So.
no worries,
Wait, I didn't do my math on it yet either. My formula, I should say. 185.
a total of $185 in advertising expense, right?
Oh wait, yes.
Yes. Then I'm going to go to my assets and redeem my little voucher here. So go up to prepaid accounts. All right. 614. Okay. I guess you could say redeem here. 50% DW NPMT flyers. General journal number 4. And I'm going to credit my account by $50, bringing now my account balance to
$6,654.17.
good. So now I brought it back down to that 6,654.17. Okay. And then lastly, I gotta go to my liabilities because I paid the remaining amount on my credit card. So here you go, 614. Okay, I'm gonna go ahead, 50% remaining on flyers. General journal number 4, and I'm gonna add another $50. Bringing now my new account balance to be,
Hold on, I'm still behind in typing for some reason. Hold on one second. That's sorry. 185.
it's going to be now 185. So here, that's exactly what reflected on our advertising expense because so far we've made nothing but purchases for advertising. Okay, good. Now we finished our ledger, so let's update our vendors now. So now we can go back down to city printers again, and this time we can go ahead and claim the rest. Okay, so here we go, the 14th, right? So here I'm going to go ahead and say picked up 2,000 flyers. Okay, and I paid with a Visa credit card. Okay. General journal number 4. Okay, so again, no terms are applied because I'm buying advertising. So here, this is where I could go ahead and place my prepaid amount of $50. My original bill was again $100, and I also made a payment of $50. Okay, so if you applied the formula correctly, it should reflect that you owe City Printers $0, right? We're going to start with our $100 payment, or the bill was for $100, right? Because we made a 50% down payment, which is my advance payment, it reduced my bill to $50. And because I paid with my Visa credit card, it acts as if I made a payment already. So therefore, I should owe City Printers $0. Okay.
I did wrong here.
All right, so you want to do the formula again?
Yeah, I'm gonna clear it out because it's telling me I owe 100, but I have everything in the right categories and the one above is, so let's see here.
Okay, so equal. We start with equal.
Yeah, the equal.
Mm-hmm. We're going to start out with our invoice amount of 100. We're going to subtract any prepaid, subtract any returns and allowances, subtract any discounts, and lastly, subtract any payments. So make sure that the numbers that you place in there are not negative, that they're all positive. Were you able to get 0?
Yeah.
Perfect. Okay. And now we are done with that transaction. So good. Let me see. We only have a couple more transactions, and let's see if we're doing good on time. Let's go ahead and finish this off. Take a quick break and then finish the trial balance at the end of the day. So there's only a few more transactions left. So let's see here. Okay, so here what happened next?
Friday, June the 14th, purchase from Restaurant Supplies, 1,000 medium coffee cups at 5 cents per cup, $50, with the tax of 8.25%, $4.13, total due $54.13. Pay with business credit card and post the subsidiary ledger.
Okay, so we bought business supplies. All right. And that's going to be considered an asset to us, right? Because we're going to own these cups when we purchase them. Since the tax is already included, right? How am I going to journalize this business supply?
Okay, so it's going to be, let's see here, cups, medium coffee cups,
Good.
right?
Mm-hmm. Medium coffee cups.
And that is, where'd it go? 11,760 is the number for the account.
11,760. Okay. And because how am I paying for these cups?
We are paying for it with the business credit card. So
Perfect.
Visa payable.
It'd be Visa payable. Good.
And that's 22,000.
And my grand total for each transaction is going to be
$54.13.
$54.13. Okay, $54.13. And here I'm going to also write a little description here that I purchased this from Restaurant Supplies. Okay. and that I made a total purchase of 1,000 cups. Okay.
And so then next we go to the ledger.
Yes, next we go to the ledger.
And then we're gonna go to the assets,
Mm-hmm.
11,760.
So that's going to be way up at the top before inventory happens. So let's go find that account. Here I have, I guess I forgot to take that out. Here we are, business supplies, medium. I bought medium cups, right?
Yeah, medium coffee cups, yeah.
Good, medium coffee cups. So on June 14, here I'm going to make a description saying I bought 1,000 cups, okay? Just so then I have an idea of how much I should have when I start using my cups as I sell my items, my products, right? So of course, post reference is going to be general journal number 4, and I'm debiting my account for 5413, bringing my debit balance to be 5413. All right. Is everyone here? Michelle, are you still there?
Yes, I'm back.
Okay. Oh my gosh, that's right. Did you just went to go pick up your kids?
Yeah, I'm back.
Okay, perfect. All right.
Yeah, yep. I listened, but I wasn't able. So I'm sure you saw I left for a minute, and then I got back.
Okay.
It disconnected me when I rolled out of my driveway. But anyways, so on the break, I'll go back in and I'll watch the video and I'll do the end and I'll get myself caught up to where you guys are at.
Okay, I can't the video that's currently right now recording. I can't. It takes time to process to upload it. So if anything, if you want to work with Robin during the break, you may do so. But the one thing that we'll do is after this, because we're at the final transaction, we'll just go ahead and do the trial balance after the break.
Okay.
So you should be able to update your general ledger as soon as we finish up here. Okay. So again, here's my 1,000 cups for $54.13. So the last thing I'm going to record here is, of course, placing it into my business credit card. So on the 14th of June, I bought coffee cups for general journal number 4, and I purchased it for $54.13. Now bringing up my balance to be
Hold on, so 232 is 239.13 cents.
$239.13. Okay? Good. And then lastly, we are going to go to our restaurant supplies. RRR, restaurant supplies. Okay. So on June 14, June 14. Okay. My notes here is I'm going to buy 1,000 cups. Okay. Do I have an invoice number or a receipt number? I do not believe I do. That's okay. Typically it'd be a receipt number. Okay. Post reference is going to be general journal number 4. And of course no terms because I went to the store and bought it. So now my invoice amount is going to be for the $54.13. Oh, I also forgot to make a note here that I paid with a Visa credit card. And because I made a payment for the Visa credit card, right, of the $54.13, I should owe restaurant supplies for this transaction nothing. However, I still owe them money for the cash register.
Correct.
Okay, so good. All right. All right, let's go ahead and deal with the very, very, very last transaction of the 14th, and then we'll wrap up with our trial balance. So here we are. Okay, of course I'm the owner. So what happened? I mean, I'm not the owner. I'm gonna say Bob is the owner. Okay. So because I'm the
Over withdrawal.
accountant, so Bob, right, is the
Mhm.
owner of Coffee Cafe, and he decides to pull out $1,500 from the bank. All right. So because he's withdrawing from the bank, what are we going to journalize here?
Well, let's see here. It is going to be an owner's withdrawal.
Yes.
It's
Going to.
still the 14th, right?
Mm-hmm. So owner's withdrawal.
And that is, let's see, where is that one? Oh, there we go. 32,000 is the account number.
32,000. And how much is Bob withdrawing?
1,500.
$1,500. Okay, so I finished my general journal number 4, so I moved on to general journal number 5, in case you didn't know that. So here, owners withdraw.
What date did we do that? I'm sorry.
The 14th.
14th?
Mm-hmm.
Okay, so everything I put in for the 14th, we've been putting in general journal 4.
No. Yes. This is I finished my general journal
for
4.
this one. Oh,
Yeah.
so this, okay.
Yeah.
I was confused.
Okay, so here.
Oh, hold on.
Okay.
I want to make sure I'm on the old page, so that is confusing. So
Okay.
up off of this current page and go to another page.
Okay.
Sorry.
No worries. Okay. Now, of course, if the owner is going to withdraw money from the bank, where are we taking this amount out from?
The checking.
The checking account. Yes. Now, there are 2 ways that you can do this, right? Because the owner has full access to his own bank account because he owns the bank. I mean, he owns the business. So he can go to the bank and he can just withdraw the money. Now, in proper terms or proper transactions, right? The best way to, avoid fraud is to properly write a check out to the owner so that owner can take that money or take that check and deposit in his own bank. Now, how do you want to do this since it says he just withdrew from the bank?
So, well, I guess, I mean, if he just withdrew, I can tell you right now if we're doing a check or.
Yeah. So I'm giving you the option. Do you want him to just directly rip the money right out of the bank account, or do you want him to actually write a proper check?
So.
Good. Yes, right?
prefer a check.
Because he's saying, I deserve $1,500. I did all this work, so I'm going to go ahead and write myself a check. Which, I mean, technically he's the owner of the business, so yes, he can write his own check.
Right.
So again, so we're going to write a check. So let's go to the check register. Okay, so everything's going to be a little off now because now we have a new check. All right, so again, on the 14th of June, we have a check written out for $1,500, and it is to Bob Mason.
Okay.
Right, owner of the store, and you're gonna find this name familiar when we move into QuickBooks. Mr. Bob Mason. Okay. So again, we wrote the check for 1513. So let's go ahead and place this in our journal. Okay, so owner withdrew from bank check number 1513, was it?
Yeah, 1513.
Okay, 1513. Okay. And good. So now that we completed our journal, right? We have the owner's withdrawal. We're taking it away from our checking account. We wrote our check. Now let's go ahead and do our general ledger. So here, an owner's withdrawal account is going to be an equity account, of course, because we're reducing our equity now. Now, of course, we won't do it until the very end of the period. So here, let's find our owner's withdrawal account. And we're going to go ahead and type in the date. So again, whatever details you want to write here, you don't really need to write the owner's name because you should know who the owner is.
I can put the check number though, right?
Yes, you could put the check number. Yes, that's a good. Okay, so good. Check number 1513. Post reference is now General Journal 5. And we're going to debit the account for 1500, making our balance 1500. Okay, so I'm going to expand my account real quick so I can see my 1500 in there. Okay. And then the last thing that you're going to do is, of course, go to your checking account and process that check on the 14th. Check number 1513, General Journal number 5, and we're going to credit the account for 1500, bringing my account balance to be now
$4,189.92.
good. So good thing that we didn't over withdraw. I mean, overdrafted the bank. Bob went into the bank and pulled out the money, so he had enough money. All right. So good. Now that is it for all the transactions that happened for the week 2 of Coffee Cafe. So save your work because when we come back from the break, we're going to complete our trial balance for week 2. So I'm going to draw a line here to indicate that I am going to be completing my transaction. I'm done with the books. For week 2, and I'm going to do my trial balance. So right now I'm going to call the break at 3:15. So I'm going to go ahead and let you guys have a 20-minute break since we kind of went a little long today. So please be back by 3:35.
Okay.
Okay?